Okay, so you've seen it, right? You're watching a stock price and one day it's just soaring. The next, it's like a piano dropped out of a cartoon window. Total whiplash. And it just makes you go, what is this thing actually worth? Well, let's get into it. Today, we are going to crack the code on how to value a stock without totally losing your mind.
I mean, that really is the billion-dollar question, isn't it? When the price is bouncing around like a pinball, how in the world are you supposed to know if you're looking at a diamond in the rough or just, a rock? How do you tune out all that noise and figure out what a company is really worth underneath it all?
And this right here is the absolute core of the whole thing. You've probably heard this quote before, but it's famous for a reason. Price is what you pay. Value is what you get. See, the price, that's just the sticker price for today. It can be totally random, based on the market's mood swings. But value? Value is what the company is truly worth deep down. And getting that difference, that's where it all begins.
So, to actually figure out that value, you first have to admit something. Every single one of us has these, two little voices in our head, and they are constantly fighting for control of that buy button. They represent two totally different ways of thinking about investing. So, let's meet them.
All right, so on one shoulder, you've got intrinsic Irene. Think of her as the detective. She's got the trench coat, the magnifying glass. She loves her spreadsheets and wants to know what this business is truly worth, all by itself, with all the market noise shut out. Then, on the other shoulder, you've got relative Randy. He is the ultimate hype man. He thinks spreadsheets are boring. He's all about what's trending, what the crowd is doing, and most importantly, are there enough rocket ship emojis in the group chat?
Okay, let's dive into Irene's world first. Her whole approach is called intrinsic valuation. And the name says it all, right? It's all about looking inward at the company. It's like she's completely ignoring the wild party going on in the market and just focusing on the business itself to figure out its true value.
Yeah, for Irene, the stock market is just that loud, annoying neighbor you're trying to tune out. She doesn't care about the day-to-day drama. She's a detective, remember? So she's only looking for 3 key clues. 1. How much actual cash does this business generate? 2. What's its real potential for future growth? And 3. What are the risks? What kind of dragons are lurking on its path? That's it. No hype, no noise, just the fundamentals.
So how does she pull this off? Well, her secret weapon is something called a discounted cash flow analysis, or DCF. I know, it sounds super complicated, but it's really not. Think of it like a simple 3-step trick. Step 1, she gets out her crystal ball and guesstimates all the cash the company is going to make, like forever. Step 2, she fires up a financial time machine to zap all that future money back to today's dollars. Because, a dollar in 10 years isn't worth the same as a dollar in your pocket right now. And step 3, voila. Whatever number is left over, that's her best guess at the company's true intrinsic value.
All right, enough with the quiet detective work. Put down the magnifying glass because it's time to go to the party. Let's listen to that other voice, relative Randy. His method is called, you guessed it, relative valuation, and it has nothing to do with fundamentals. For Randy, it's all a big popularity contest. It's about looking around at what everybody else is paying.
And this slide says it all. This is Randy's entire worldview. For him, a company is worth whatever the next person is willing to pay for it, period. It's not about some theoretical number. It's about what people are actually paying for this thing and stuff like it right now. It's all about catching the wave.
So yeah, Randy's toolbox is a little different from Irene's. It's basically a FOMO checklist. He's asking, okay, what are similar companies selling for? That's the first check. Is this thing trending online? Hype check. Are all my friends buying it? Social proof, check. He's also looking at things like the PE ratio, the price to earnings. He wants to see how this company's price tag compares to its buddies in the same industry. It's all about comparison.
Okay, so you've got the quiet detective Irene in one ear and the loud hype man Randy in the other. So who's right? Who should you listen to? Well, here's the secret. The trick isn't to pick one, it's to get them to work together as a team.
Seriously, this isn't some epic battle for your financial soul. The smartest investors know that both Irene and Randy bring something super important to the table. Each one gives you a piece of the puzzle that the other one just can't see.
Here's the best way to think about it. Intrinsic Irene, our detective, does the heavy lifting. She's the one who finds you a genuinely wonderful company, one with solid fundamentals. But then, relative Randy comes in and checks the scene. He looks around at the market and tells you whether that wonderful company is actually selling for a fair price. So Irene finds the quality and Randy checks the price tag.
And this kind of leads to the ultimate truth about all of this, summed up perfectly by the Dean of Valuation himself, Aswath Damodaran. Valuation is not a science. You're never ever going to find one perfect magical number. The whole point of using both your inner detective and your inner hype man is just to be, well, less wrong. It's about making a more informed decision than if you were just guessing or blindly following the crowd.
So, the big question to ask yourself is this. When you're looking at a stock, who's talking louder in your head? Is it Irene, the detective, patiently sifting through the details? Or is it Randy, the hype man, getting caught up in the excitement? There's no right or wrong answer, but just knowing which voice tends to dominate is the first step to making sure you're actually listening to both.